2024, one of the best performing stocks in the entire market has been MicroStrategy, a software company that is best known for holding large amounts of Bitcoin. As of the time of recording this video, the company's stock prices increased by more than 400% year to date. MicroStrategy's strong performance is driven by strong gains in the price of Bitcoin itself. People buy MicroStrategy stock as a proxy for investing in Bitcoin. But interestingly, in recent months, its stock prices far outperformed the price of Bitcoin. At the peak, the company's market capitalization reached over $80 billion. As MicroStrategy stock price has surged, its valuation has far surpassed the value of the Bitcoin it holds. Its premium to net asset value has reached as high as 300%. Put differently, if you buy $3 worth of MicroStrategy stock, you're gaining exposure to $1 worth of Bitcoin. Despite the seeming overvaluation, many investors are still bullish. On social media, influencers are talking about MicroStrategy as an infinite money glitch that defies laws of traditional finance. MicroStrategy founder Michael Saylor says that his company has become a Bitcoin bank and he expects to eventually achieve a $1 trillion valuation. In this video, we'll analyze the recent hype around MicroStrategy and whether or not they've really found an infinite money glitch. Just recently, a massive data breach covering multiple data brokers and 2 terabytes of data was exposed. This resulted in cybercriminals potentially gaining access to the personal information of over 100 million Americans. Think of things like your name, email address, home address, phone number, and much more. Unfortunately, these incidents have become all too common. The reality is, if you use social media, browse the web or shop online, your personal information is almost certainly being tracked and sold. Websites sell your personal data to data brokers who profit by selling it to pretty much anyone who's willing to pay. You have the right to contact each one of the hundreds of data brokers and ask them to delete your data, but this is a long and difficult process. That's why I use DeleteMe, who's also the sponsor of today's video. They do all the work for you. Just input your information and they'll automatically contact hundreds of known data brokers and compel them to remove your data. Within 7 days, they'll give you a report showing all the personal data they've removed for you. Take a look at all the data brokers that had my personal data and DeleteMe has already removed them. I've already seen a massive decrease in spam emails as a result, and now you can get 20% off DeleteMe US Consumer when you go to joindeleteme.com/WSM and use promo code WSM at checkout. That's joindeleteme.com/WSM code WSM. Thank you to DeleteMe for sponsoring this video. Prior to 2020, MicroStrategy was a small-cap enterprise software company that was not particularly remarkable in the stock market. In 2020, its founder and chairman Michael Saylor realized that the company had hundreds of millions of dollars of cash on its balance sheet. The real value of this cash was slowly eaten away by inflation, so he decided to use their cash on hand to buy Bitcoin. At the time Bitcoin ETFs did not yet exist, many investors started buying MicroStrategy stock as a way to indirectly gain exposure to Bitcoin without the need to open an account on a crypto exchange. MicroStrategy software business reached maturity a long time ago and wasn't growing very fast. For the previous decade, its stock price had languished in the $15 to $20 range, but after they bought some Bitcoin, the stock price started to surge. Saylor first bought Bitcoin just as a way to protect his company's cash reserves from inflation, but the impact on the stock price was far more than he probably anticipated. This created a massive opportunity. He realized that the more Bitcoin he buys, the more a stock price will probably go up. In 2020, MicroStrategy had a few $100 million of cash aid accumulated over the years when the profits of their software business as they bought Bitcoins. This cash quickly ran out, so he decided to do something that seemed crazy at the time. He issued bonds, used the proceeds to buy Bitcoin. At first, the idea for this debt was backed by their software business. Even if the price of Bitcoin collapsed, they could use the profits from the software business to pay back the bonds, but the software business only generated about $50 to $100 million of cash flow per year as they started borrowing billions of dollars to buy Bitcoin. This proposition became much more risky. If you remember, back in 2020, there was a bear market where the price of Bitcoin declined 75% from peak to trough. MicroStrategy stock price fell by more than 80%. At this point, there is real fear that if the price of Bitcoin fell much further, they may be unable to pay their debts. Fortunately, Bitcoin started rebounding in the nick of time, allowing MicroStrategy to avoid bankruptcy. As of November 24, 2020-4, MicroStrategy owns 386,700 Bitcoins, which is about 1% of all Bitcoins that will ever be mined in aggregate. They spent about $17.5 billion to acquire these Bitcoins, give them an average cost basis of $45000 per coin. As of the time of recording this video, the price of Bitcoin is over $90,000. So they've made a massive gain. The $17.5 billion they used to acquire these Bitcoins came from three sources: traditional bonds, convertible bonds, and equity issuance. The most interesting aspect of MicroStrategy is its premium to net asset value. This is the value of its share price relative to the value of the Bitcoin it holds. There's a website called MicroStrategy Tracker which keeps track of this. If the NAV premium is 1, this means that MicroStrategy's market cap is the same as the market value of its Bitcoin. From 2021 through 2023, the NAV premium remained at approximately 1. In 2020-4, MicroStrategy stock price increased far faster than Bitcoin, leading to a large NAV premium. The NAV premium increased to as high as 3 times. MicroStrategy Tracker.com just looks at MicroStrategy's market capitalization. But we also need to consider diluted impact of its convertible bonds. A convertible bond is a bond that can be converted into stock at the discretion of the bondholder. Let's suppose you are a company and today your stock price is $10. You raise $1,000 by issuing a convertible bond. The bond yields 0 interest. But the bondholder has the option to convert this bond into shares at a strike price of $10. The principal value of the bond is $1,000, so that translates to 100 shares. At 1 year, let's suppose the stock price rises to $15. The bondholder will choose to convert his bond into 100 shares of stock, which is worth $1,500. In this case, the bondholder made a $500 profit. Alternatively, if the stock price falls to $5 per share, 100 shares is only worth $500. In this case, the bondholder will rather just ask for his $1,000 of principal back. Thus, the convertible bondholder can participate in the upside while also being protected from the downside. Over the years, MicroStrategy's raised billions of dollars issuing convertible bonds. Because its stock prices increase so much, most of these bonds are in the money and will likely be converted into stock. As of the time of recording this video, MicroStrategy has 6 tranches of convertible bonds outstanding, maturing between 2027 and 2032. MicroStrategy's current share price is about $350. For 5 out of the 6 tranches, the strike price is below the current share price. Thus, if MicroStrategy stock price remains at its current level, these bonds will be converted into stock. In aggregate, this will oblige the company to issue 24.7 million new shares of common stock. As of the end of the third quarter, MicroStrategy had 202.6 million shares outstanding. Subsequent to the end of the third quarter, they issued 13.5 million new shares in an at-the-market equity offering. We also have to add the 24.7 million shares that will need to be issued for the convertible bonds. In total, this brings MicroStrategy's effective share count to 240.8 million. As of the time of this video, its share price is $350, giving them an adjusted market capitalization of $84 billion. They also have $3 billion of convertible bonds that are out of the money. This brings the enterprise value up to $87 billion. They still have a software business that generates about $500 million of revenue per year. On its own, this would probably be worth about $3 billion. Subtracting that, we get an adjusted enterprise value of $84 billion. The company owns 386,700 Bitcoins, thus the valuation per Bitcoin is $218,000 as of the time of recording this video. The price of Bitcoin is $92,000, thus the premium to NAV is approximately 2. 4 times. The NAV premium changes every day based on the movements of MicroStrategy share price and the Bitcoin price. MicroStrategy takes advantage of its high share price to issue shares and convertible bonds and uses the proceeds to buy Bitcoin. That's how they've been able to build up such a massive pile of Bitcoins. Michael calls MicroStrategy a Bitcoin bank. To be clear, MicroStrategy is not a bank. This is just a term that Michael Saylor made up. MicroStrategy raises capital by selling shares and convertible bonds. They then use the proceeds to buy Bitcoin. That's all they do. If you go on YouTube or TikTok, you'll see various channels talking about the MicroStrategy infinite money glitch. What are they referring to? Here's the basic idea. MicroStrategy issues shares, convertible bonds, and uses the money to buy Bitcoin. Investors see that MicroStrategy's Bitcoin holdings are increasing. That gets them excited, so they buy the stock, pushing the share price higher. The higher share price allows MicroStrategy to sell even more stock and buy even more Bitcoin, and the cycle continues. The iron rule in the world of investing is that if something seems too good to be true, it almost certainly is. The biggest anomaly with MicroStrategy is why are investors willing to pay a premium for its shares? When you buy a share of MicroStrategy, you're effectively buying $1 for $2.40. Why would anybody do this, especially now that you can buy a Bitcoin ETF at zero premium? Well, who better to ask than Michael Saylor himself? In a recent interview on CNBC, he attempted to explain why his company strategy justifies such a large premium. Yeah, well, I think a lot of people don't understand our core business. We're a Bitcoin treasury company. We're powered by Bitcoin Reactor. We've got $35 billion of Bitcoin, and it's spending at 100 balls. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. We generate a spread, the BTC spread we generate. It's a function of the equity premium, the convert premium, and the Bitcoin premium. The Bitcoin premium is the AR Bitcoin versus the US dollar. 2 weeks ago we did $4.6 billion of an ATM. We ran it at a 70% spread. That means we made about a $3 billion BTC gain. 5 days this week we did a convertible bond, $3 billion at a 80% BTC spread. That's a $2.4 billion gain. I think the thesis of the shorts is if the premium and the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, if Bitcoin goes up 30%, and by the way, Bitcoin is going up 60%, we're getting a 90% BTC spread. But it would be 80 in BTC spread, which means the $3 billion fixed income raise and preferreds or bonds generates the same $125 a share and $30 billion over 10 years. So once you understand that, you have a different view of the company. So what do you say though to those who say there's a risk here, because this is effectively a levered Bitcoin position, and if in fact Bitcoin goes down, this becomes a much more complicated situation? Yeah, well, the number one risk you take is the existential risk that Bitcoin has an extinction level event and goes to zero immediately tomorrow. But every long investor in MicroStrategy is a Bitcoin maximus or Bitcoin believer. They've accepted that risk. Once you accept that risk, what do we expect? We expect it's going to go up 29% a year for the next 21 years. It's been going up 60% a year. You know, over the last 2 weeks, Andrew, we generated $0.4 billion in BTC gains. We're making $500 million a day. I'm staring at my screen and we're selling dollar bills for $3, sometimes 1 million times a minute. And so it's not impossible. I mean, we may very well be the most profitable company in the United States, growing the fastest right now. He threw around a lot of numbers and jargon. Let's break things down in a way that's easier to understand. The only way to justify a premium for MicroStrategy stock is if the number of Bitcoins per share increases over time. There are 2 ways they do this: firstly with equity issuance, and secondly with convertible bonds. Specifically, Mr. Saylor references the company's most recent equity issuance between November 18th and November 24th. The company sold 5 6 million new shares for approximately $440 each, raising $2.46 billion in total. They used this to purchase 25,000 Bitcoins for $98,000 each. Prior to this purchase, the company had 252,000 Bitcoins. Thus, their Bitcoin holdings increased by 10%. At the end of the third quarter, MicroStrategy had 245 million shares outstanding. Thus, the equity raise only increased their share count by 3%. The percentage increase in Bitcoin is greater than the percentage increase in shares outstanding. This results in an increase in Bitcoins per share. Michael Saylor calls this a profit. Specifically, he says he is selling $1 bills for $3. This is technically a creative to existing shareholders, but this only works if MicroStrategy stock trades at a premium. If you're buying MicroStrategy stock, you're effectively betting that new investors in the future will be willing to buy new shares at a premium. It's kind of like the greater fool theory. Here we have two charts. One is MicroStrategy's Bitcoins per 1,000 shares, and the second is a premium to NAV. Between 2021 and 2023, the stock did not trade at a substantial premium to NAV. During this period, the number of Bitcoin per share also did not increase much. It wasn't until 2020-4 when the premium skyrocketed that MicroStrategy was able to sell $1 bills for $3. Now let's look at Michael Saylor's second argument. He says that even if the stock did not trade at a premium, they can still make profits by issuing convertible bonds. He calls this monetizing volatility. So what does this mean? On November 21, 2024, MicroStrategy issued a $3 billion convertible bond maturing 5 years from now in 2029 at a % interest rate. The bond can convert into shares of MicroStrategy at a strike price of $672. This was a 55% premium to MicroStrategy share price at the time. They used the proceeds to purchase approximately 30,000 Bitcoins at a price of $98,000 each. We know that MicroStrategy is trading at a massive premium to its net asset value. But for the sake of argument, let's analyze what would happen hypothetically if MicroStrategy did not trade at a premium. After all, Michael Saylor said that it would work even with no premium. In this hypothetical scenario, let's assume that MicroStrategy stock trades for exactly the same as its net asset value and stays that way. Thus, the movements of MicroStrategy stock will exactly equal the changes in the price of Bitcoin. So in 2024, you borrow money to buy Bitcoin at $98,000. There are few possible scenarios that can play out by 2029 when the convertible bond matures. The strike price is at a 55% premium. So if Bitcoin is above $150-2 in 2029, the bond will be converted into stock. So your profit is fixed at a maximum of $57,000. This is the difference between the purchase price and the strike price. Any further upside accrues to the holder of the convertible bond. If Bitcoin is below $152,000, the bond does not convert and you need to pay back the principal balance of $98,000. If the price of Bitcoin falls below $98,000, you incur a loss because the value of your Bitcoin is less than the principal you have to pay back. Issuing convertible bonds to buy Bitcoin is not an infinite money glitch. It is a risky investment strategy. In fact, if you're really a Bitcoin maximalist, it is not even your ideal investment strategy. Michael Saylor says he expects the price of Bitcoin to go up 29% per year every year for the next 21 years. How he came up with this number is unknown, but I'm taking it straight from the horse's mouth. If Bitcoin indeed increased 29% per year, it will be $350,000 by 2029. With the convertible bond, your profit is capped at $57,000. Thus, the vast majority of the gains will accrue not to you but the holders of the convertible bond. If you really believe Bitcoin will reach $350,000 by 2029, you'd be much better off issuing a non-convertible bond. Even if you had to pay a 10% interest rate, the interest expense would only be $60,000. You would make a profit of $192,000 per coin. Far greater than the $57,000 you make in the convertible bond scenario. Michael Saylor talks about monetizing volatility, but if you expect massive upside volatility, you should not want to sell that. In a separate interview, Michael Saylor gives another rationale of why investors might want to hold MicroStrategy stock instead of Bitcoin. Like if you want to borrow $1 billion for 1% right by Bitcoin with it, hold it for 7 years. You can't do that as an individual, but MicroStrategy can do it. What do you mean? It is indeed true that most individual investors are not able to issue convertible bonds, but it's important to understand that MicroStrategy's ability to borrow is also constrained. If their leverage ratio is too high, lenders will balk at lending them more money. At current market prices, their Bitcoin is worth about $35 billion. They have approximately $7 billion of convertible bonds outstanding. So, they're only taking about 1.2 times leverage, paying a premium of over 2.4 times NAV to get just 1.2 times leverage seems hard to justify. Before we wrap up, I want to again thank DeleteMe for sponsoring this video. To get your data removed, the internet, remember to check out DeleteMe via my link in the description and get 20% off. As always, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial signing out.